FAIRtax is coming, don't stand in the way. FAIRtax is coming across the USA. FAIRtax is coming, clean up this mess. We got to get rid of the IRS. Hey, hey! Hey, hey!
Hello and welcome once again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the
FAIRtax
FAIRtax
Guys.
Guys, and we are dealing with information overload today. A lot of stuff to get to in the program. But before we do, let's give out our email address one more time. If you've got a comment or a question about the FAIRtax or about the program, thefairtaxguys@gmail.com, or you can leave us a comment on our Facebook page. Facebook, of course, is everybody's way to communicate these days.
Yeah, it seems to be very big, and I know our national and state groups are using Facebook a lot to reach out to people. Okay. So our Facebook page would just be facebook.com/the FAIRtax
Okay, but as we said, information overload, lots of stuff to get to today.
Oh, boy.
And with the political election season really starting to kick into full cycle now, people who haven't been paying attention for the past year are going to start paying attention. And tax reform is going to be a big thing in this election cycle.
Absolutely.
It really is. Of course, the politicians say that all the time, that they're going to give us big tax reform, and we haven't seen any yet.
We haven't seen any since 1986, not real tax reform.
All right, but real quickly, though, let's go through the 7 features of an effective tax system, what the goals should be, what the goal of real, meaningful tax reform ought to be. And the first one, I love this, it's the simplest for comprehension and compliance. The simpler, the better.
Yeah, make it simple so that, 1, you can comprehend what's going on, and 2, it's very easy to comply with. You don't have to buy software or hire a tax expert. So make it simple.
Okay, again, real quickly here, it has to be fair to everybody across all income levels, has to be visible. People have to understand and be able to see how much they're paying for government, neutral to business impacts. Of course, you've got to do as little damage as you can to the businesses that drive your economy. This is a big one. It has to be efficient and cost-effective to administer and collect.
That the IRS spends 25 cents out of every dollar they collect in taxes? That's terribly inefficient.
Oh, mercy. It has to be stable, avoid frequent changes to the tax code so that it's not one thing one year and something entirely different the next. And this is a big one, too. Least obstructive to economic growth.
Right.
Taxes, by their very nature, are going to have some impact on economic growth. And the ideal, most effective tax system would affect economic growth adversely in as small of a way as possible. So, what have we got here?
Well, a couple of weeks ago, in late June, Paul Ryan and Kevin Brady. Paul Ryan, of course, is the Speaker of the House. Kevin Brady is the chair of the Ways and Means Committee. They came up with a tax plan. It's not a bill. It's not something they're going to vote on. It's a series of ideas for tax reform.
In other words, it's just a theory at this point.
Yeah. It's a series of ideas. They came out. They've got something called A Better Way, and they have one section for health care reform, another one for job growth, and so on. And this one's about taxes. Now, I did a search online because, yes, you can go to the speaker's website and you can download his PDF for A Better Way, but it's written by a politician. How about we get something that we can actually understand, okay? So I did some searching, and actually I had a heck of a time finding a news article that really spelled out the nuts and, I wouldn't say the nuts and bolts, but at least the highlights of the plan. I finally found one by the Washington Post, so give them credit. And I'm not going to go through, except I'm going to quote 2 things on the first page. First, they talk about sweeping tax reform. Sweeping tax reform. And then in another sentence, they say the tax plan would slash rates across the board, and they go into some details. Keep in mind those 2 terms, sweeping tax reform and slash rates.
Yeah, let's see what the politicians' version of those things are.
Yeah, because I think their definitions are a little different than our definitions.
Amen to that, brother.
So, anyways, so the headlines of the major components of Ryan's tax plan. The first one is cut the top individual tax rate from 39.6 to 33%.
Wow, that's a slash, isn't it?
Yeah. Does anybody listening consider that a slash in tax rate? That is a drop of 15%. Now, it's good.
Wait a minute, 15 from 39 to 33 is 6.
Yeah, I know, but compared to 39.6, do the math.
Okay.
Come on, you were a programmer. That's about a 15% drop in the tax rate. And that's good. That's good. Anytime you drop the tax rate, you will help the economy. When people pay less in taxes, they spend more on stuff. And that's what we want people to do. Go out in the economy and buy stuff. Okay? Now, the next item. Replaced itemized deductions with a higher standard deduction. And, that's good too because it simplifies doing your taxes. All right? If you have to maintain the current system, let's make it simpler and easy to do your tax return. And getting rid of all the itemized deductions with one larger standard deduction. I've said before that, when Bob and I have talked about doing our taxes, getting software and stuff, and I spend all the hours doing, adding up all the itemized deductions and come to find out after doing all that work and spending all that time, the standard deduction is the way to go.
Oh,
so
yeah.
they're gonna get rid of it anyways.
So that's simpler, but is it the simplest? We will get to that.
No, and plus they keep things in there like mortgage interest deduction, charitable giving, and education expenses. So yeah, they make it simpler, but when you're comparing to what we have now, that's not really saying a lot. This one is good. Postcard-sized tax returns for most individuals. That would be good if you could make it so simple that all they do is fill out a few numbers on a postcard and send it in. That's good. Okay.
What did you make? Add 10%. Send that in.
Yeah.
Okay.
Yeah. Right. You didn't make enough. You got to make more because the government needs it. Eliminate the alternative minimum and the estate tax.
Now, that's a good idea.
Very good idea. Eliminate those. Now, Bob and I will agree that when it comes to elimination, we had a few more taxes in mind to eliminate. Mm-hmm. All right. Cut tax rates on investment. That's very good because when you cut the tax rates on investment, people invest money, even if you just put money in a savings account because you're saving up for a down payment on a house. All right. Cut the tax rate on the interest. I mean, why is the government charging us interest on what we're earning on our savings? If they cut the tax rate, people will save and invest more, and that helps the economy. So that's a good deal. Increase the child tax credit. Well, that's good. Increase because remember, a credit goes directly against your tax bill. It's not a deduction. A deduction reduces your taxable income. A credit actually goes against your tax bill. You owe X amount of taxes. This credit reduces your tax bill by this much. So it is an increase in the child tax credit. That's a good idea. Now let's go to the corporate side. The article says cut the top corporate tax rate to 20%. But I also read in another document that for small businesses such as S-corps, partnerships, and LLCs, their tax rate would be at 25%, but the larger companies, the C-corps, they would be at 20%. Why? Why do the smaller companies... Remember, the smaller companies create most of the jobs in this country. So if you want to create jobs, take the burden off the small companies. But anyways, that's their answer to it. And that is a drop from 35 to 20% for those big corporations and from 35 to 25% for the smaller corporations. That's a significant drop. Okay, and that's good. But I don't understand the two different tax rates for large and small companies. Anyways, allow businesses to immediately and fully write off capital investments. So if a company is going to buy a new pickup truck, or it's a really large company and they're going to invest and build a new wing onto their factory, that's a big investment. They immediately can write that off. Okay, that's good. That helps business. And if you help business, you create more jobs. And the last one is good. Shift to what they call a territorial system of international taxation and border adjustments. Okay, let's put that in English. We've talked about before about companies that have an overseas presence, American companies that have an overseas presence, and they make and produce products and services overseas, and the profits they make from those interests, those activities overseas, if they bring it back to this country, they get nailed, and I can't remember what the tax rate is, but they get nailed big time for repatriation taxes. So they are going to eliminate that. That's a very good idea. However, it wouldn't eliminate the money that's out there right now that would be coming back. It would reduce that rate. But any new profits that were created, after January 1st or whenever they put this into effect, there would be no repatriation taxes. So anyways, so there you have it. You've got a tax plan mostly by Paul Ryan, okay? Mostly by Paul Ryan. Paul Ryan is the Speaker of the House. He's the boss. He gave the Ways and Means Committee, I want you to come up with a tax plan that fits these criteria. He didn't say come up with the best tax plan. He didn't say come up with the simplest tax plan. No, he said, I want you to come up with a tax plan that fits these criteria. And this is what they came up with.
Now, excuse me a second here, brother. Have we not seen this movie before?
Well, I think we have.
This looks awfully familiar to me.
Yeah. And, Bob, you and I have read this article by Carrie Bauer.
Yeah, our friend Carrie Bowers came out with an analysis of this thing, and one of the neatest things in this entire thing, and I'm quoting him here. So, what did the committee recommend as the better way to tax in response to the Speaker's charge? In its most basic description, they chose to go from an income, payroll, and corporate tax system, one administered and enforced by the IRS, to
an income, payroll, and corporate tax system administered by the IRS. In other words, it's just more of the same.
And that's their definition of sweeping reform. Forgive me if I snicker up my sleeve a little bit about that, but folks, that is the kind of shenanigans, the wool over your eyes that politicians of all stripes, we're not getting into parties and into ideologies here, but that is what politicians of all stripes will try to do. They will sell you the same thing with a new coat of paint on it and tell you they've made this sweeping change when they've really proposing the same system we've got.
Yeah. These changes are good, but only if you insist on staying within an income tax frame of mind, okay? Why? Why do we have to stay within an income tax system? Why can't we do something really, really bold, get rid of the 16th Amendment, get rid of the income tax altogether? Forget about all this nonsense. You want to talk about simple. Get rid of the income tax, and let's see how simple things can get.
All right, let me quote a little bit more from our friend Kerry Bowers, where he says, as stated earlier, the committee included expert opinion and concurring comments recognizing the advantages of consumption-based taxes over income-based and corporate taxes, and some of the opinions and comments that were taken from the committee's document itself. Quoting again, consumption-based tax systems are widely regarded to be more pro-growth than income-based tax systems like the current tax code. And another comment says an income tax includes savings in the tax base and thus penalizes saving, whereas a consumption-based system, as the name suggests, taxes only what is consumed, not what is saved.
Now, it is interesting that they have these comments, and there are more, too. More favorable comments about a consumption tax.
Well, yeah, let me hit one more. As a result, income-based systems discourage savings and investment, which means slower capital accumulation, lower productivity, and therefore slower economic growth. Now, the committee is aware of this. The experts that they called in to help them formulate what the better way would be is telling them these exact things, and it looks like it's going in one ear and out the other.
Well, we can speculate, Bob. Obviously, we weren't there, and we haven't talked to Kevin Brady ourselves. I'd love to.
I'm going to try to talk to Kerry Bowers, though. That'll be an interesting one.
Yeah. By the way, folks, Kerry Bowers, let me give you a little background on him. He was actually a presidential candidate in the beginning of this cycle. Kerry Bowers was the first Republican to file for the candidate for president. But you've probably not heard his name before. He's not an ex-governor. He's not a billionaire businessman. So I've met, my wife and I have met Kerry several times. He had a wonderful platform. His website, as far as his presidential race, he spelled out what was wrong, how to fix it, and how he was going to do it. All right? What was wrong, what would fix it, and how he was going to do it. Most presidential websites don't have that kind of detail. But he couldn't get the traction. He didn't have the name recognition. And so now he's running for Congress in Nevada. Kerry used to live here in Florida. And I learned at one time he was actually the state director of the Florida FAIRtax Group. That's the group that Bob and I belong to, and we are volunteers with the Florida FAIRtax Educational Association. Kerry was actually our state director. And I've used he created a training document that when I started doing presentations, I used a lot of his material. Very, very good stuff. He really can get into the numbers. So he's very knowledgeable about the taxation, economy, and so forth. And frankly, I was telling Bob when I sent him this article, for Kerry to write something that's only 3.5 pages is a minor miracle.
Yeah, and I want to quote one more little thing from this article. And these are questions that you, the individual taxpayers out there, should have in mind as well. It says, given the committee's expert findings and parallel opinions, it begs to ask the question, why did the committee choose to stay the course with yet another income, payroll, and corporate tax system? That's particularly troubling when a consumption-based tax plan, one with 20-plus years of research behind it, that's already in legislative form, and with more congressional sponsorship than any other tax reform plan, why was that almost entirely dismissed? And that plan, of course, is the FAIRtax, a consumption-based tax that was presented to the committee that could best achieve the committee's goals. And they gave it no mind whatsoever. I got a feeling it's because the K Street lobbyists have got a little backdoor access to these guys, don't you think?
Well, my own opinion is that Kevin Brady put this in here. They've got like a 30-something page document for a better way, tax reform. And I believe, my opinion, and I have nothing to back this up except, just my own conjecture, Kevin put this in there because he is a co-sponsor of the FAIRtax, and he has been since the first day in '99. And he understands how important the FAIRtax is and the research behind it. So he had to do what his boss told him to do, and his boss is Paul Ryan. And Paul Ryan wanted this other plan. So he had to do that, but at the same time, he's also making a lot of reference that Bob has read here about consumption taxes and how good consumption taxes are. So this stuff is in the report, all this glowing opinions about the consumption tax. So it is in there. It'll be interesting for us to see over the next few months. We've got at the time of this recording, we've got the Republican and the Democrat conventions coming up, and then the real
the rubber hits the road and we get at it.
Yeah, the rubber hits the road and they start, and the candidates really start going after each other. And tax reform is going to be one of those items that they come up with.
But you were telling me just before we went on the air that there is a kind of a ray of hope that there are people on the Democratic side of the aisle now who may not be talking specifically about the fair tax, but they are at least leaning in the direction of considering a consumption tax.
Yeah, Steve Hayes has reported to us. Now remember, Steve Hayes and Peggy Green Ernst, who are both board members of the Americans for Fair Taxation, the national group. They go to Washington once a month, and they go up there and they have meetings with people and they've been doing this almost 2 years now. And at first, they got very little traction with folks on the Democrat side. They really didn't want to hear anything about a consumption-based tax. But then Senator Ben Cardin, I believe that's his name, put out a tax plan that included a consumption tax. Now, it included an income tax, a consumption tax, and a VAT tax, which...
Now, hang on there. We do not want to give our congressman all three. One should be sufficient.
That sends shivers down my back. But
at least they're considering the consumption side now.
It got them talking about a consumption tax. And Mr. Cardin actually talked to Steve and said, I look forward to discussions with you about a consumption tax. Well, that's really good because now both sides of the aisle are talking about a consumption tax. And again, it's just my own opinion. I don't have anything to back this up. I believe that Mr. Brady put this in about all these glowing comments about a consumption tax because he really likes the idea of a consumption tax.
A quick question for you. Have any of these plans been scored yet?
No. And that's another thing. We have to give, I'm not, as you can tell, Bob and I are not thrilled with Ryan's plan. And I'm calling it Ryan's plan because this plan...
We saw the same thing in 1986, and it did not stay flat.
No.
You reduced the number of brackets, and it grew right back again. You reduced the highest rate, it grew right back again. Mm-hmm. We've seen this movie before, and the ending is not good.
Oh, yeah. In 86, they reduced the number of tax brackets. I can't remember how, I think they were 7 or whatever, down to 2.
Well, this goes from 7 to 3.
Yep, 7 to 3, so that's good and so forth, but how long will it take that? But let's give Paul Ryan credit for one thing. He has stated, he talked about this before he was Speaker of the House, and now that he is Speaker of the House, tax plans are going to be scored dynamically. Now, what do we mean by that? First off, Bob, what do we mean by scoring?
Scoring is calculating the impact of what a particular plan will have on the economy, how much money it will raise, and various sort of things, what it'll do to the economy.
Yeah, well, not just the economy, but Congress. They want to know how much is this going to raise. But in the past, Congress has refused to do scoring that actually included, all right, what would this tax plan have on people and corporation behavior?
So static scoring says if you raise the rate 15%, you get 15% more money.
Yeah, right. Without taking anything into account about what it did to the economy. So static scoring is what we've had for all these years up to this point. And it really was not a realistic way to score the tax plan. By scoring, I believe they give it to the Congressional Budget Office,
the CBO,
and they go
that.
through. Yeah, and they go through it and they say, okay, we're going to look at and see. And they told in the past, they told the CBO, you cannot take a look at what this does to people's behavior, corporation behavior, and the economy. You just score this within these parameters.
What's it going to raise, and what effect is it going to have on the deficit and stuff like that?
Yeah, stuff like that. Paul Ryan has said, no, that's crazy. That doesn't make any sense. Every tax plan has an effect on the economy. It has an effect on people's behavior. It has an effect on corporate behavior. Every tax plan. People find a way to minimize their loss. And in this case, taxes are a loss. So Paul Ryan has said, all right, when you score this, you have to score it dynamically. We want you to take into effect, what is this going to do to the economy? How is it going to affect the economy? Is it going to stifle the economy? Is it going to enhance the economy? So give Paul Ryan credit for wanting to have this done dynamically. This is very important because when they score all the tax plans, and I believe what's going to happen, I've heard this from Randy Fisher and I've heard it from others, sometime next year when we get a new president, all right, if we have a president who's open to the idea of different forms of taxation, the Congress will bring in the fair tax, any other tax plans that are out there, the income tax, Paul Ryan's plan and so forth, and they're going to have debates. They're going to have debates on them. They're going to be investigated in the Ways and Means Committee, and they're going to be scored dynamically. The fair tax, well, we're just going to do glowing against the others. We're going to do so much better than the other tax plans because the fair tax, the research has been done. Privately, we've funded over $20 million in research. We know what the scoring is going to say about the fair tax. It's going to boost the economy, boost jobs like nothing we've ever seen before. The other plans can't come close. So dynamic scoring is going to be a big plus for the fair tax people. Big plus.
Oh, yeah. I tell you, one of the things that really struck me was Paul Ryan was asking for a better way.
Yeah.
When the fair tax was designed, the charge given to the people that did that was, find me the best way.
Yeah, that's a good point, Bob. Absolutely. And Kerry Bauer's response to this is that, well, yeah, you've got your better way, but here's the best way. He spells it out. And, Bob and I have been talking to each other before this recording. We said, why settle for better when you can have best?
Well, when you're a politician that wants to keep selling the tax favors that they've been doing for decades, that might be a clue.
Yeah. So we've got to get past that. So, in some ways we're not happy with Paul Ryan for this tax plan, but it is a plan. It's not a bill in Congress, all right? It is something for people to look at. And we have three branches of government. It doesn't mean that the House has to be in lockstep with a new president. I mean, that's not going to happen. And realistically, it shouldn't. So whoever's the new president, they're going to have their plan, the House will have their plan, and the Senate will have a plan too. So we're going to look at that, and we look forward to the discussion because we believe that when this is truly studied, the fair tax is going to jump out in front of people.
Well, I'll give Paul Ryan credit. What he has come up with is a better way.
Yeah.
But it's not the best way.
It's not the best way. Absolutely.
So how do we get the best way?
Well, we've got to push the fair tax, don't we, folks? And how do we do that?
The next 12 months are going to be critical.
Yep. If you want to learn more about the fair tax, if you just started listening to FAIRtax Power Radio, then we encourage you to go to FAIRtax.org. FAIRtax.org has just all kinds of information about what the fair tax is, how it works, and stuff like that. There's a couple of books on the market. The FAIRtax book by Bortz and Linder that was published in 2005, and then 3 years later they came out with Answering the Critics, the FAIRtax book, The Truth, again by Bortz and Linder in 2008. We just published, our little group here in North Central Florida recently published an electronic book, America's Big Solution, which you can find on Amazon for the Kindle, on Barnes & Noble Nook, and for the Apple iBook. So it's a very brief, simple, upbeat way to be introduced to the fair tax.
And don't forget the new website, bigsolution.org.
This is very important. When you want to get involved and actually help us get this done, I mean, people say, well, how are we going to get this done? Bigsolution.org is the way to do it. There's 4 sections there. Connect, in which you connect with the Americans of Fair Taxation and you allow them to send you emails. They won't flood you with emails, and they also will not sell your email address and your contact information to others. They never, ever do that. So you're not going to get crap from all kinds of other people. Then support. There's a support button. That lets you sign the petition, and in the future, there's going to be more things on there. They're talking about having the support button connect to PopVox. Then contribute. Well, you know what that's about. In order for the Americans for Fair Taxation to get done what they need to get done, they need your bucks. All right, and then finally the builder button, the building the voter tree. That's where you put in the names and emails of your friends and family and so forth, so they can be connected with the fair tax too. Bigsolution.org, very important website. Please go there and please support us.
And again, please listen to FAIRtax Power Radio here on Spreaker and on iTunes and let's see, SoundCloud. Where have you put this?
YouTube.
You're our distribution officer,
and I'm still waiting for iHeartRadio. I expect to notice any day that we're going to be on iHeartRadio, but I haven't to this day date. I haven't got it yet.
And again, for some interactive contact, thefairtaxguys@gmail.com is our email address. And again, we have a Facebook page, The FAIRtax Guys. You can leave comments or questions. We do watch that fairly closely. There's several of us that
Yeah, we
that.
do. We do. And the webinar, once a month, the fourth Thursday, go to fairtax.org/webinar.
And that's going to wrap it up for this edition of FairTax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
We are the FairTax Guys, reminding you that the fair tax is America's big solution. And once you understand it,
You'll demand it.
Fair tax is coming, don't stand in the way. Fair tax is coming, cause the U.S.